This little change in your analysis will improve your trading results, and it doesn't matter what strategy you trade. I've gone through the comments of my recent videos, and a lot of people ask me where to find volume or gap imbalances in forex pairs like the EURUSD, British Pound USD, the Australian dollar, the US 500 market, and many more. The answer is simple. You will not find them in the spot market price charts. When you are trading Euro US dollar on a CFD broker, for example, you should always use the data feed of your broker for executions and the currency's futures contract chart to do your analysis. The same rule applies to indices as well. If you want to trade the S&P 500 market on your CFD broker, execute your trades on whatever data feed your broker uses and do your analysis on the S&P 500 E-mini futures contract chart. Let me show you why it's very important to apply this change in your trading for better results. To the left you have the spot market price chart of Euro USD, and to the right you have the Euro FX futures chart of the continuous contract. Use the continuous contract to do your analysis and execute your trades either in the current futures contract month as a futures trader, or use the spot market price chart from Euro USD if you are trading CFDs. Let's go over an example from this Tuesday in the ODR session, and I will show you how you most likely missed out on a beautiful DR trade. Both charts have a red DR box with a DR short confirmation. But what small little detail makes them different from each other? We have a beautiful open gap imbalance which has been created right at the opening of the ODR session, while the spot market price chart to the left will not show you that. What else do we have? We left an open volume imbalance in the futures market price chart, which also aligns with the closing price of the ODR. Like I always say, these open volume imbalances are very important and tend to have a magnetic function for price. We return back into the open magnetic web on the Euro FX futures chart. While retracing, we leave another open magnetic web here. You should already know what possibility comes into play. That's an opportunity to take a short here. Notice how you would not get that small but very important confluence in the spot price chart. Stop can go anywhere above the IDR mid, aiming for around 3R. Price reached more than 2 standard deviations at the end of the session. If this setup would have failed, we obviously could go for a second bullet in the retirement setup area. Turning on all volume imbalances from the session gives you an even clearer picture of what great opportunities you might have missed if you are using the spot market price chart for your analysis. Here's the same day, same session in the Australian dollar. What do you notice here? There's even more details visible in the futures market chart compared to the spot market price chart. The spot market price shows that we didn't get back to the opening price, while the futures market rejected the opening price of the ODR session 2 times to the tick and returned into an open web. Price pushed lower and confirmed shorts with a higher probability. What else do we have? While in the spot market price chart, we rejected the IDR low with a wick, we had the same happening in the futures market chart, but with the body of the candle rejecting the IDR low to the tick and a previous web as well. Price also left an open volume imbalance while retracing. That's a good indication that we might at least return back, or ideally even lower, for a potential short setup. We don't get these confluences in the spot market price chart to the left. That could have been a valid short setup here, with the stops above the web and the closing price of the DR session. If the setup fails, always remember that you can possibly get a deeper retracement into the retirement setup area with a better risk to reward. 2 bullets maximum for a session, that's it. The currency futures price chart will always give you the real price of a currency because the SLP providers act in the futures contract and not in the spot market. Use them for your analysis instead of the spot market price chart and pay attention to all the details. Here are some markets with their futures contract ticker. I highly suggest you to always use the futures market chart for your analysis, whether you trade currencies, indices, commodities, bonds, or any other assets on your CFD broker. Otherwise, you will miss a lot of good confluences. You can check all futures contract specifications on websites like cmegroup.com. There, you will find everything you need to know about each contract month, its first trading day, last trading day, etc. Make sure that you backtest your strategy and apply this simple but effective knowledge whenever you're trading on a CFD broker. Have a good day and now get back to backtesting.